I tell you what, I love my house cat. I've actually got several house cats and I love them, but today we're going to talk about the dead cat bounce pattern and why it is a pattern to either avoid, especially as a newer or intermediate trader, or potentially short sell. Hey everyone, I'm lead trainer with StocksToTrade, Tim Bohen here. Be sure to subscribe as well as ring that bell. Today we're going to be breaking down chart patterns, something great to always have in mind, but we're also doing every single week a YouTube live every Monday night. So be sure to ring that bell so that you get notified when I go live. We talk about the hot stocks of the day. You want to be there live. We engage in chat. I answer every question, so be sure to subscribe and ring the bell. As I mentioned, we're going to talk about a pattern that I think gets a lot of traders in trouble, and it's something that really I think should be avoided. I mentioned in the beginning you can look to short this pattern, but it's difficult to short because a lot of these stocks are very hard to borrow. Remember, if you're not familiar with short selling, you need to get the borrow. A lot of these stocks are lower float. They can be very difficult to borrow. So let's talk about why I think you should avoid it and what trips up many traders. So let's get to the chart. You'll see this is a stock, I mean, hey, who wouldn't love this? This is GTBP. The news today was they may, and remember in low-priced penny stock land, they always talk about may and might and hope, but they may have a cure for HIV. So great news. I mean, that's the kind of news that people like to get behind. You can see the stock closed up 79% today. Huge move from 30 cents to 57 cents, closed at the high of the day. This is the kind of stock that I think traps, in a bad way, traders that see the news, see the price movement, and get impulsive. They get bit by that FOMO. They want to get in early. They want to be in day one. And then the next day, the stock gaps down, and they were like, wow, how did I lose again? Why doesn't trading work for me? Well, I'm going to show you a couple patterns and why I think you need to back out and think about the long-term pattern. So why do I call it a dead cat bounce? And this isn't my term. I didn't innovate it. It's an old school pattern. But the idea is, and remember, we're talking figuratively here. We're not literally throwing a cat out the window. But the idea behind the joke or the analogy is, if you throw a dead cat out the window, it'll bounce, but it's not going to bounce long. It'll hit the concrete, jump up, and then it's right back where it came from. And the reason GTBT is exactly that is up 80% today on the one-day chart. Let's look at the one-year chart. This is even something that could trap you, because now you see stock's been choppy. It's spiked recently. I mean, you can see it's gone from $1.50 to $2.75 a few months ago. It's gone from 75 cents to $1.75 again recently, about 6 months ago. And you see this big candle and this big volume, and you think today is the day. Has the news, has the move. I want to take this stock overnight because it's making that high of the day. Why is this my example as a dead cat bounce? Let's go to that 5-year chart. Now, you might not be a technical trader, you might not be a long-term trader, but I think you can quickly see what the prospects long-term are for this thing. Now, this stock has done reverse splits in the past. We've done other videos on reverse splits. If you're not familiar with that, it's a term you should be familiar with. This stock never actually traded at $5,000 a share. They've done numerous reverse splits, which is even more doom-inducing for these low-price stocks. But look at the difference. Focus on that idea. Don't get caught up in FOMO of day one. I don't care if there's news. I don't care if it's up 80%. When a stock has a long-term chart like this, the odds of it succeeding over multiple days are very, very low. There's a lot of examples of this, but always, please, if you're thinking about trading a stock overnight or swing trading, look at that one-year chart, look at that 5-year chart. Have Be a professional, okay? Think about what other traders are looking at, and the biggest thing I see so many get in trouble with is that FOMO, that fear of missing out. They see the news, they see a big move, and then the next day the stock gaps down and they can't figure out why they're not consistent. So, thank you again, everyone. Have you traded a chart pattern like this? Have you traded that day one bounce on a stock that has been downtrending for 5+ years? Has it worked for you? Has it not? Do you believe in the dead cat bounce pattern? I mean, if you catch them early in the day, it might work, but I think it's an avoid. Let me know below. Do you like this pattern or not? Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.